Hi everyone, Darko here for another weekly trade example. In this video I will talk about a follow-up on an oil video that I posted in advance on our YouTube channel to see how things went, and then I will give you a full top-down analysis on the S&P. Would you be interested to see or hear my point of view of what's coming in the stock market for the next coming maybe 6 to 12 months? Before I start, make sure that you sign up for our free version of Coach's Corner, where you get lots of benefit. You go to forexmentor.com/cc starter and you will get right away our top 3 price action videos, and there are lots of archives within that free version service. You will get a great feeling of what we are providing for our paying clients on a regular basis. Also, make sure you listen to our podcast. As I always say, this podcast alone will save you a fortune. You will hear about my story, how I lost everything, and basically from what I've been doing for the past 16 years, summarized in those podcast episodes. Okay, and also here's the video on oil. If you go to our YouTube channel, this is the video that I want you to rewatch or watch if you haven't seen it before, to see what I'm talking about in today's video. Okay. So basically, I grabbed the mic last week and I told you about a pending order that was in the market that I was seeing. Just give me one sec to see where my lines are. There you go. So I had a pending order that I recorded in advance on oil, and this was the line. Go back and re-listen, and I said wait for price to come back into this level for a pending order with a low stop loss. Okay, we got filled on the 18th, on Tuesday, and there were several ways to manage this, and I will go through the trade management. When we entered that trade, there were 2 levels of natural stop. This is the first level and this is the second level, and there are pros and cons with using both of them. If you have this as your natural stop, well, you are trading more lots, but there's also a chance that price will stop you out and then move in within your direction. Or if you use the deeper natural stop, you are trading less lots and there is less chance to price to stop you out. And if price breaches this level, then you are obviously not interested in trading this pair. Both are super valid, okay, and you just need to be okay with which one you take. So if you take the first one, the stop loss was around, I think it was like 300 pips. This went up almost 600 pips. That's like almost 2 to 1. Okay, if you took the deeper one, that was around let's see here, I think it was 300 pips, right? Take it from here to here. No, sorry, that was around just 500 and let's see here, 70-ish pips, 570 pips. And from where we got filled to the highest point, that was 570. So regardless which one you took, either you took out like almost 2 to 1, reduced risk and everything. That's the first option. The second option is you are up 1 to 1. Okay, you are risk reducing. Maybe you took something off, and now both ways you have a free look. Let's see what the market provides us, and the trade management is super important. So either you took the option number 1 or option number 2, you took something off, you risk reduce, now you have a free look. Let's see what the market happens. If price goes down on you, breach this level, it will be a reduced win. Okay, enough said. And this is what I'm doing for my paying clients on a regular basis. I point out pending orders. Once we get filled, I grab the mic and go through the trade management. Hey, this is your stop loss, this is your TP1, this is your TP2. You are risk reducing, taking something off, having a free look, depending if you are using hands-on, hands-off trade management. Everything is explained in great detail on the website, etc., etc. Okay? Enough said about that trade. Hope you enjoyed that oil trade, and let's see what the stock market is doing. Okay, so like I said, would you be interested? There are like lots of depression, recession, inflation, the end of world again, this will be never ending story, blah blah blah, and you don't what you need to understand is when things looks super dark, super depressed and everything, those are the times where you can make yourself a fortune. Okay, amateur people is panicking, selling, and they are running away. Professional traders, they do their analysis, they write down the game plan, they plan for the future, they do some heavy advanced analysis on some of the stock the companies that they trust in, that has been around for ages, that will be around for ages, and you read the numbers. I have a own design formula, a bit, I wouldn't say it's complicated, it's more like an advanced formula to how to pick the great, the most trustable, reliable stocks, and invest on these on the pullback. And once the market bottoming out, you will never see these levels again, and you will make yourself a fortune. That's how a fortune is being made, when things are not looking good. When things are like up in here, those are where the amateurs wake up and say, hey, I better start investing in the stock market, everything is going up. Well, that's too late. Okay, that's too late. You should be planning for that right now. Okay, so if I move this line up in here, okay, first and foremost, the yearly chart looks strong and healthy. Okay, nothing bearish about it, and I don't care if this closes super bearish. That's just normal. A very strong uptrend on a yearly chart, a very strong uptrend on a monthly chart. This is heading up, very strong looking chart. We had a minor level that was down in here, and I pointed out that level way before we hit that level. That was where I involved myself in the stock market. Okay, price bounced from that level. Where do we go up to? Is it a coincidence that we drop from here? No, look left. Okay, there is a strong level of resistance. There is no hindsight. Okay, price hits that level, then there were like two options. The options were on a weekly chart. Because we did a higher close, I said to my clients, well, price will probably give you a reaction from here, and we never know how deep and strong that reaction might be. We might be breaching this level to make a lower high and then drop, or we just react from that level and then drop. Well, that was exactly what happened. Okay, so why are we seeing some bullishness in the stock market? Is it like a coincidence? No. Well, price is reacting perfectly to the pip from the next level of support. Price hits that level and going up. Okay, so it's not a coincidence that we are seeing this stuff, and this is where I usually add on into my existing stock market, or the stock positions. I'm getting into these levels, waiting for these levels to get touched, and then I add into my existing position, and I'm pointing everything out on my LinkedIn. Okay, I'm showing you all the goody stuff. Make sure that you follow me on LinkedIn. I'm giving you motivational stuff, posting my live account in here. Back then I was down 7%. This week when the market opens, I will be around break even. Okay, I'm doing some analysis on US stocks, Swedish stocks. That was American Express. This is Amazon. This is Apple. Okay, Microsoft, Tesla, Netflix, all the goody stuff. And obviously I'm also showing you some Swedish stocks as well. Okay, so the market is reaction from here. So what are we doing from here? Well, if I go to my weekly chart, I see very clearly that we are actually, having these lower highs. Okay, so what could happen from here is actually price is heading up. I need to just give me 1 sec to mark that resistance level. Just give me 1 sec. So what I see happening from here is actually price heading up. Okay, heading up to, we see this leg in here, and we have another leg in here. Within this one, we made another one in here, another touch. Okay, so what we are doing from here, we reacted from this level that I showed you on a monthly chart. It's also weekly level, no brainer. Price is reacting from here. So at some point at this level in here, we will have another lower high and a lower low. this time we are heading into this strong level of support. Okay, and then we will see what happens. Okay, the other options, so we either can come down into this level and we start, you know, making lower highs and lower lows, and at some point we will be breaching one of these swings, and that will usually sign that the bottom is reached. Nothing has changed fundamentally. I'm digging deep into some fundamental stuff, reading some fundamental books about inflation, you know, the how to interpret these, you know, economic indicators, what matters and everything. So what could happen from here is either we make a lower high and lower low on a weekly chart to hit this strong level of support, or if we find some, you know, bottoming out from where we are right now and having a monthly lower high somewhere in here. Okay, we will go up for, you know, a months ahead, and then we do another leg down into this level. So one of these options happening. So I would say, regardless if option number 1 or option number 2 is happening, somewhere around, I would say, September 2023. Okay, this is the guideline, like, you know, the what I'm expecting where the market is actually bottoming out, and then that's what we will be seeing. And by the time we are in here is around like September September next year, and obviously by January, February, March 2024, we will be leaving this level, and you will never ever see these levels again. Okay, the same way we won't be, probably we won't be seeing the corona levels again, or the levels where the stock market crashes in the financial crash in 2007. We never saw these 2009 levels again. So and these are where fortune being made. Okay, and if you are a big fan of Fibonacci retracement and extensions, if you draw from here to here, okay, that juicy level that I'm pointed out is also the 618 fib. And if we make another, a monthly lower high, look how well the extensions are actually playing out. This is amazing. Okay, price comes down into this 50 level, goes up, maybe hitting this 50 level or the 618, which is also coincides with the resistance, heading down into this zone. You have the 618 retracement and the 121.272 extension. It's also a very strong level of support, and from here we will be like, ranging and then bottoming out and then do this. And whenever we get this, if it's early next year or maybe summer next year, and we are bottoming out, and then this will happen, and that's it. So there's no reason to panic. Make sure that you invest in the right stocks. Do your analysis. Feel free to ask questions. I have a very strict advanced formula how to pick the right stocks. And make sure that you follow me on LinkedIn, and everything you need to know about the levels are there, and I will be more than happy to help you. Okay, in hard times like this, you need someone to actually mentor you and encourage you, and give you some guidelines and guide and mentorship in hard times, when actually the amateurs are running away, getting panicked. There is nothing to get panicked about. Okay, the inflation is very, very high. The central banks needs to increase rates in order to get inflation under control, and we need to see some bad numbers in the near future about consumer confidence and consumer sentiment, and the GDP and unemployed rates and such, in order to read this number correctly and see, because the fundamental is for direction. Technical analysis is for timing the market, and you need to basically know both in order to maximize your profit in the market. Hope you like this video. Make sure that you support me and our website by hitting the like button, and I will be more than happy to do these on weekly or monthly basis to keep you updated on what's going on in the stock market. Okay, thank you so much for listening. I wish you a fantastic week. Cheers.